You are listening to Charting Wealth for Tuesday, the 20th of June, 2017, the day before the solstice. And we see that stocks are up, both the S&P 500 and the Qs. The Qs up 1.67%. TLT down just a little bit, 0.14%. And gold down 0.76%. Let's jump right in first with the S&P 500. We're going to take a look at that on the weekly chart. We see the weekly chart is continuing to move up, got very close to a crossover going down, but we did not call it crossing over. Why? It was too close, and the DO, the derivative oscillator, was still in the positive. We just did not feel good about it, and good thing that we did, because it was up 0.83% for the day. Now, as we delve in a little deeper, we see on the two-day chart, still above, hasn't crossed over going down. Looked like it was getting very close to doing that back on the 16th, Friday. Did not happen. If we look at the 4-hour chart, we see that it is trying to cross over going up. If indeed that crossover occurs, watch for it in the morning, in the afternoon on Tuesday. If it does cross over, you might consider jumping in. I would like to see the derivative oscillator flip over at the same time. We're already hitting the top of the Bollinger Band on the Heikin-Ashi candlestick, so just be careful there. Now let's go to we'll go back to our weekly chart, and we will check out the Qs. QQQ, that's the NASDAQ 100, up 1.67% for the day. Now, we had a vertical crossover going down on Friday. So remember when we had it happen back on the 13th? That was the 13th of April. That was a Thursday. Market was closed that Friday, but it crossed over. We then saw it cross right back over going up 2 weeks later on the Friday ending the 28th. And of course, it shot up, and we did great riding that up after taking that little bit of a loss where it crossed over going down and then popped right back up again. It is a stronger crossover going down at this point when we just look at the candlestick movement. We had a rather large spinning top followed by a strong red down candle for the week ending the 16th. And we are seeing the derivative oscillator continue to heat up in downward energy much more than it did back on the weeks of the 21st and the 28th. Didn't even have it cross over on the week on the 13th. But we saw up movement for the day. So far in the week, we've got a spinning top, but of course, that's just the first day of a candle that'll take 5 days to make up. If we look at the 2-day chart, we can see a green upward movement still below the 2-day trend line, and the derivative oscillators continuing to heat up on that 2-day chart. We're continuing to see down movement, not as strong as it had been in the previous candle, but still down movement on the price percent oscillator. So we will go to the 4-hour chart, see what's going on there, getting close to crossing over, going up. So again, if we do see that crossover going up, of course, we darn sure don't want to be getting in. But of course, what did we tell you to look for this morning? As you know, those of you who've followed us, and if you've not listened to our vertical crossovers training that we have at the website chartingwealth.com, you definitely need to listen to it, because we talk about how important it is for you to track what's going on at 10:30, because that's after idiot hour ends. That's the first hour the market's open, where the market maker's given a lot of ability to do a lot of things. We wait for the market to settle out. And of course, on that 30-minute chart, the market was booming up. It would not have been a time to get in. So what do we do now? Well, we keep an eye on that 4-hour chart. We see if indeed it crosses over going up, which it looks like it's close to. See if things shake out. If it does rotate over and start going down strong, you can sure find an entry point there. Again, don't do it until after 10:30, but we will continue to keep an eye, because like we said, the big trend has crossed over going down. We just want to find an entry point at this time, and we do not have one yet. We'll look for that on the 4-hour chart. Okay, let's keep moving through these charts. We're on the weekly again. We're going to TLT. That's the 20-year Treasury Bond Fund. It is continuing to move up. It was down for the day just a little bit, 0.14%, but we have a nice strong weekly trend line. The weekly chart continues to move up as we watch this first day of the week start things off. We go to our 2-day chart. What do we see? Well, it's starting to level off. It's still moving up on the PPO, the price percent oscillator derivative, but it's going sideways. But it's not heading down, at least. We see that the derivative oscillator is losing some of its energy, and we see that the highs over the last few days seem to be right about the same spot. So keep an eye on that. Price movement is still above the 2-day trend line, well above the weekly trend line. So keep an eye on things as we look at the 4-hour chart. What do we see? We see again, we can see that sort of topping off over the last few days on that 4-hour chart where it's stated about 126.34, something along those lines. So keep an eye. If the 4-hour chart crosses over going down, of course, that would be a potential time to pull the plug on that up trade. So let's just see how things go. If stocks continue to boom up, you might very well see the 20-year Treasury Bond Fund continue to move down. So we'll continue to keep an eye on that. But again, it bears watching closely, particularly on that 4-hour chart. Back to the weekly. We head on to gold. Gold was down 0.76% for the day. Of course, we now have a weekly vertical crossover in gold forming. It did not happen at the end of the week, but it is starting to form going down. Can't confirm that yet until the week is out. Gold, of course, started moving up on a weekly vertical crossover all the way back on the 27th of January. So it's about time for gold to see some down movement and a crossover going down. Got close to doing it back on the 12th of May. Did not happen. We'll see if this is sustained. Just because it's crossed over now doesn't mean that if there's not up movement during the week, it could pull it back over. That's why we never call a crossover until that candle ends. That's when you call it. Whether it's a 2-day, a 4-hour, a weekly, a quarterly, the quarter, the week, the 2-hour, the 2-day has to end before you can call it a crossover for sure. Otherwise, you're just gambling. Let's take a look at what's going on the 2-day chart on gold. Again, crossed over going down back on the 16th of June. And again, has been going down for many, many days since it really first started moving down all the way back on the 8th of June. Now, of course, what is our prescient chart? That is our 4-hour. And again, that 4-hour crossed over going down back in the afternoon on the 8th of June and has really been going down ever since then. One little pop-up around the 14th. And it did look like it was settling out over the 2-day period from the 15th through the morning of the 16th, and then really dropped off going down on the afternoon and broke through what looked like it could have been a floor. Again, this 4-hour chart is a total trading chart in gold. It works for us seemingly all the way through the end of the year till about mid-December. So then it doesn't work from about mid-December till sometime in early to mid-January. And then it seems to start working. It's been doing that for the last few years, and it's beautiful. You can trade just on this. It's just worked time and time and time again. Those of you who are gold folks, you know it. You've watched it with us, and it's just beautiful. Okay, we shall continue to monitor these charts every day. If you're not already signed up for it or not already following us every day with our daily market reviews, you need to do that. How do you do that? Well, there's one good way and one best way only, and that is to go to chartingwealth.com, sign up there, put in your first name and your email address, and you will receive our reviews every day as soon as they are recorded. So do that. You'll also be privy to our daily market worksheet, our weekly market worksheet. There's great trainings on how to use both of those at the website chartingwealth.com under training. You'll also receive our trader worksheet that allows you to properly track your trades and learn from your mistakes and the smart things you do. In addition to that, We also have the layout that we use at freestockcharts.com that you see on all of our videos. We have that exact layout that we provide to you for free. In addition to that, you also will get our How to Read a Stock Chart video. All that stuff is for free at the website. Well, it's all for free if you sign up for the email. That is the daily market review, and all the training is at the website. God bless you guys. Thank you so much. We love to hear from you. cw@chartingwealth.com. For all of the folks that applied for our quarterly S&P training, we have approved all of the folks for that, unless you received an email that said you weren't approved this go-round. All of you who did not receive a negative response, you are enrolled. We will have that prepared here in the next few days, and we will be getting that out to you, and we would just ask you for good feedback on it. God bless. Thank you so much, my friends. All the best from chartingwealth.com.